The market just opened. Your screen glows with green and red candles dancing across the charts. Your heart rate quickens. Your palms sweat. You tell yourself this is just another trading day, but deep down, you know something else is happening. You're not just trading numbers, you're trading your emotions, your fears, your deepest psychological patterns. Welcome to the most honest conversation about trading you'll ever hear. This isn't about finding the perfect indicator or the holy grail strategy. This is about the battle that matters most, the one happening inside your mind. Today, we're going to expose the 5 psychological demons that destroy more trading accounts than any market crash ever could. We'll reveal why 90% of traders fail, not because they lack intelligence, but because they're fighting an invisible enemy. And most importantly, we'll give you the mental tools to win that fight. You've probably been there. You have a solid strategy. You've backtested it. You know it works. But when real money is on the line, something changes. You second-guess yourself. You exit early. You chase trades. You risk too much. You ignore your rules. Sound familiar? That's because the real game isn't played on the charts. It's played in your head. The enemy within. Let's start with an uncomfortable truth. Your brain is not designed for trading. It's designed for survival. For 200,000 years, your ancestors lived in a world where quick decisions meant the difference between life and death. See a shadow? Run. Hear a noise? Fight or flee. Find food? Grab it before someone else does. These instincts kept our species alive, but they're destroying your trading account. When you see a green candle shooting up, your brain doesn't see a price movement. It sees opportunity escaping. When you watch a red candle plummet, your brain doesn't see a natural market correction. It sees immediate danger. Your amygdala, the brain's alarm system, floods your body with stress hormones. Cortisol and adrenaline hijack your logical thinking. This isn't a character flaw. This is biology. But biology can be trained. Every time you trade from emotion instead of logic, you're making a withdrawal from your future success. You're teaching your brain that impulse should override analysis. You're reinforcing patterns that will eventually destroy your capital. The market doesn't care about your feelings. It doesn't care that you need this trade to work. It doesn't care that you're behind on your bills, or that you promised your family you'd make money this month. The market is indifferent. And that indifference is actually a gift, because it means the market treats everyone equally. Professional traders understand something amateurs don't. Trading is a probability game, not a prediction game. They don't try to be right all the time. They try to be consistent over time. They focus on process, not outcomes. They manage risk, not profits. The FOMO monster. It starts innocently enough. You're scrolling through your phone, checking the markets casually. Then you see it. A massive green candle. Volume spiking. Price breaking through resistance. Your heart starts racing. This is it, you think. This is the move I've been waiting for. But here's the thing. If you're just seeing it now, you're already too late. Fear of missing out isn't just about trading, it's about identity. When you see others succeeding while you're sitting on the sidelines, your brain interprets this as a threat to your social status, your self-worth, your place in the tribe. FOMO whispers lies. Everyone else is getting rich except you. If you don't act now, you'll regret it forever. This is your chance to finally make it big. But FOMO never mentions the risks. It never talks about the traders who bought the top. It never discusses the inevitable pullbacks. It only shows you the wins, never the losses. Social media amplifies FOMO exponentially. Every day, you see screenshots of massive gains, rocket ship emojis, and to the moon posts. What you don't see are the blown accounts, the sleepless nights, the relationships destroyed by reckless trading. Remember, most of what you see online is survivorship bias. The traders posting their wins aren't posting their losses. The influencers showing their gains aren't showing their failures. You're seeing a highlight reel, not reality. The cure for FOMO isn't to trade faster, it's to trade better. Here's how. Define your edge. Know exactly what you're looking for. If it doesn't fit your criteria, it's not your trade. Embrace missed opportunities. Every missed trade is a victory if it wasn't in your plan. You're not trying to catch every move, you're trying to catch the right moves. Focus on process. Judge your success by how well you follow your rules, not by how much money you make on individual trades. Time perspective. Think in months and years, not minutes and hours. The market will always offer new opportunities. The revenge trader. You just took a loss, not a small one, a loss that stings. Maybe it was a perfect setup that just didn't work out. Maybe it was a mistake. Either way, you're sitting there staring at your screen, your account smaller than it was an hour ago, and something dark starts to grow in your chest. I'm going to get it back, you tell yourself. One more trade. The revenge trader doesn't think logically, they think emotionally. They don't calculate risk to reward ratios. They calculate how much they need to make to get even. They don't look for high probability setups. They look for high profit potential. This is how small losses become big losses. This is how bad days become account-destroying weeks. Revenge trading isn't really about money. It's about ego. Your brain interprets a trading loss as a personal attack, a challenge to your competence, a threat to your identity as a trader. The need to get even is your ego's way of trying to restore your sense of control. But the market doesn't care about your ego. It doesn't owe you anything. It doesn't know you took a loss, and it certainly doesn't care about helping you recover. Here's what makes revenge trading so dangerous. It compounds. You take a loss, so you risk more on the next trade. That trade loses, so you risk even more on the next one. Before you know it, you're risking 10%, 20%, 50% of your account on a single trade. Professional traders never do this. They understand that capital preservation is more important than capital growth. They know that as long as they have money to trade, they can always come back. But if they blow up their account, the game is over. When you take a loss, follow this protocol. Stop trading. Close your charts. Walk away. The market will be there tomorrow. Journal the trade. Write down what happened. Was it a good trade that didn't work out, or did you break your rules? Process the emotion. Feel the frustration, but don't act on it. Emotions are temporary. Account destruction is permanent. Return with rules. When you come back, start small. Follow your plan. Rebuild confidence through consistency, not through big wins. The perfectionist. The perfectionist trader believes they can control the market. They think if they just analyze enough, use enough indicators, find the perfect setup, they can eliminate all risk. They want to be right all the time, win every trade, catch every move. This mindset is not just unrealistic, it's dangerous. Perfectionist traders often suffer from analysis paralysis. They spend hours looking for the perfect setup only to miss opportunities while they're analyzing. They add indicator after indicator, looking for confirmation that will never come. The truth is, there is no perfect setup. There's only probability and risk management. When perfectionist traders are finally in profit, they face a new problem. They can't let their winners run because they're terrified of giving back profits. They close trades too early, then watch in agony as the price continues in their favor. This creates a psychological trap. Their winners are too small to offset their losses, so they end up losing money even with a high win rate. The antidote to perfectionism is probabilistic thinking. Instead of trying to predict what will happen, focus on what's most likely to happen. Instead of trying to be right all the time, try to be right enough of the time. Here's how to shift your mindset. Accept uncertainty. The market is uncertain. That's not a bug. It's a feature. Uncertainty creates opportunity. Focus on expected value. A trade with a 40% win rate but a 3-to-1 risk-to-reward ratio is better than a trade with a 70% win rate but a 1-to-2 risk-to-reward ratio. Embrace small losses. Losses are not failures. They're the cost of doing business. Every successful trader has more losses than wins. Let winners run. Don't exit profitable trades just because they're profitable. Exit them when your system tells you to. The gambler. Some traders aren't really trading. They're gambling. They're not looking for edges or managing risk. They're looking for the rush, the adrenaline, the possibility of a big win. This is perhaps the most dangerous psychological trap, because it doesn't feel like a problem. It feels exciting. It feels alive. Every time you place a trade, your brain releases dopamine. This is the same chemical released by cocaine, gambling, and social media likes. Over time, your brain becomes addicted to this chemical release. The problem is, dopamine is released not when you win, but when you anticipate winning. This means you can become addicted to the act of trading itself, regardless of whether you're profitable. You're gambling, not trading. If you trade when you're bored, you increase your position size when you're losing. You can't stop thinking about trading. You hide your losses from others. You trade to feel something, not to make money. If you recognize gambling behavior in yourself, take these steps. Reduce your position size. Trade smaller until you can trade without emotional attachment. Set time limits. Only trade during specific hours. Don't check charts outside these times. Find other sources of excitement. Exercise, hobbies, social activities. Don't let trading be your only source of stimulation. Consider professional help. Gambling addiction is real and serious. There's no shame in seeking help. The overconfident winner. You've had a good run. 5 trades, 6 trades, maybe even 10 trades in a row. You're feeling invincible. You start to believe you've figured it out, that you're different from all those other traders who blow up their accounts. This is when you're most dangerous to yourself. Success breeds overconfidence. When you're winning, your brain starts to believe that skill is responsible for outcomes that might be largely due to luck. You start taking bigger risks, ignoring your rules, trading outside your edge. This is how good traders become bad traders. This is how profitable months turn into devastating losses. Overconfidence changes how you perceive risk. Risks that seemed unacceptable when you were losing suddenly seem manageable when you're winning. You start to believe that your skill can overcome any market condition, but the market doesn't care about your recent performance. It doesn't give you credit for past wins. Every trade is independent. The antidote to overconfidence is humility. Here's how to maintain it. Track your performance. Keep detailed records. Are you winning because of skill or luck? Stress test your strategy. How does your system perform in different market conditions? Never risk more than you can afford. Your position size should be based on your risk tolerance, not your recent performance. Remember the market's power. The market has humbled traders far more experienced than you. It can humble you too. Building your mental fortress. Now that you understand the demons, let's build your defenses. Your mental fortress has 5 walls. Rules. Clear, specific, non-negotiable trading rules. Discipline. The ability to follow your rules even when you don't want to. Patience. The willingness to wait for the right opportunities. Acceptance. The ability to accept losses and uncertainty. Detachment. The ability to separate your ego from your trades. Mental strength, like physical strength, requires daily practice. Morning routine. Start each day with a clear mind and clear intentions. Pre-trade checklist. Never enter a trade without checking your criteria. Post-trade analysis. Review every trade, win or lose. Remember, trading is not a sprint, it's a marathon. The traders who succeed are not the ones who make the most money the fastest. They're the ones who survive long enough to compound their returns. Your goal is not to get rich quick. Your goal is to stay in the game long enough to let your edge work. The market will always test you. It will test your strategy, your discipline, your patience, and your mental strength. But now you know what to expect. You know the demons that will try to sabotage your success. You have the tools to fight back. You have the knowledge to recognize when emotion is trying to override logic. You have the framework to build lasting success. The choice is yours. Will you let the demons win, or will you master your mind and master the markets? The battle starts now. The victory is within your reach. Subscribe for more insights into the psychology of trading. Share this with a trader who needs to hear it. And most importantly, start implementing these concepts today. Your future self will thank you.